easy path, hard life, hard path, easy life. Be willing in the beginning of your career to take the hard path, invest in yourself, and think about playing the longest game in the room. And then, like everything else in life when you're starting out, just working as hard as you possibly can.
You were an early investor in companies like Pinterest, Airbnb, Discord, DraftKings, Upwork, StubHub. What would you say is the number one trait that every billion-dollar founder you've backed had in common?
I'd say they wanted to be a billion-dollar founder. They had tremendous individual conviction in those companies, and they believed that their ideas were great.
What would you say is the company that you most regret not investing in?
Have you heard of Google?
Welcome back to 30 Years in 30 Minutes. I'm your host, Michael Oved, and we've got a great episode for you today. With that, it is my pleasure to introduce to you today's guest.
Rick Heitzmann is one of the world's leading venture capitalists and co-founder and partner of the world-renowned venture capital firm FirstMark, where he focuses on investments across technology with a focus on disruptive consumer appliances, including marketplaces, healthcare, software, and gaming. He's led investments in iconic companies such as Pinterest, Riot Games, DraftKings, Airbnb, StubHub, Discord, and Row, among many others. Rick has been named to the Forbes Midas list as one of the world's top venture capitalists for 2020, 2021, 2022, 2023, and 2024. He's received similar distinctions from CB Insights, Business Insider, and the New York Times, and is a regular contributor on CNBC. Before FirstMark, Rick was an entrepreneur and founder of First Advantage, which he helped grow and sell to First American. He holds a BS from Georgetown University and an MBA from Harvard Business School. Rick, thank you so much for joining us today.
Oh, this is great. Thanks for having me. I love what you guys are doing, and it's a pleasure to be here.
Appreciate it. So we'll start with your college days at Georgetown. What were you like as a student? Did you already have entrepreneurship on your mind when you were in college?
So I love Georgetown. It's an amazing place. Always a special place in my heart. But differently than, in the this was in the early 90s, entrepreneurship wasn't as much of a thing on campus. I would probably say any campus. I think, the advent of the internet really brought along the democratization of entrepreneurship. So I was always an entrepreneur. Everything from I started a newspaper when I was a kid to started a landscaping business and loved entrepreneurism, but never really thought about it as like, hey, here's a path of what to do at college and after college. So during college, I was very involved, though. I was the president of the student body at Georgetown and used that to get more involved and use it as an opportunity to meet people, get different experiences, and kind of grow a little bit. And then after Georgetown, I actually wound up because it seemed like what people were doing, there was not an entrepreneurial path. I wound up in investment banking.
So I want to get to banking in a sec, but just to talk more specifically about your time at Georgetown, because a lot of our audience are current students, aspiring entrepreneurs. Was there anything you did in college that you can point to and say, I did that, and that really shaped the way that I went about my career, my entrepreneurial career, and your venture capital career later on?
I mean, I did a couple of things that I think shaped my life. I mean, I think so. If you think about using college as an opportunity to grow, and how do you grow? You take risks. So being able to understand when you have an opportunity and take that risk as an opportunity to grow and see and do things is like the most important thing. I think as we think about even hiring people today or funding people as entrepreneurs today, we're looking at people that do more than the kind of the standard path of, I'm going to do this, I'm going to do this, here's a standard track. Do you have the ability to understand the risk, to take that risk, and then to understand how to create value in space? So all those things really matter. I think if there was a catalyst point, it would be the decision, which was a non-obvious decision for me. I wasn't really involved in student government. I was involved in a lot of clubs. I actually worked at the on-campus bar, which was a fantastic and separate experience in kind of being part of running a business at a very young age. But the risk I took to be able to run for student body president, and then everything that came around with it of We had an enormous budget and understanding that budget. We had over 300 people that were part of the student government. They had all of these management complexities. This person didn't like this person. This club didn't like this club. This club wanted more resources than that club. You know, the administrators didn't like those students. These students didn't like the administrator. All these things that were people management issues, strategy issues. And if you think about strategy as the allocation of resources against goals with prioritization, it was, you know, even as, I don't know, it's probably 20 years old of, you know, you'd show up at my little office in student government and there'd be people with problems. It was pre-email. There'd be memos with problems, and thinking through that really helped. And then the second piece of that, which I think was extraordinary, so not only the management side, was, hey, I got exposure to a whole lot of people who were much older than me. And I think the ability to have to work with people that are much older than you opens your mind up to what can happen. And one of the key things that you see in people that are able to excel in entrepreneurship is there was something that happened that enabled them to mature much more quickly, or was sometimes people call it early adultification. So you were either given responsibility, you took responsibility, or sometimes had responsibility thrust upon you, which then enabled you to grow up and understand things in a more complex way at an easier time. And then I think the third thing, which I realized, which was incredibly important, and I grew up, both my parents were teachers. My dad was a professor. My mom was generally a middle school librarian. That, you know, you thought about going to places like Georgetown or working on things like Capitol Hill, or meeting people that they were extraordinary and very different than you. And I kind of grew up being like, oh, I couldn't imagine doing that, or meeting that person, or seeing that, or experiencing that. And by being able to get that experience through the Georgetown student government, I had doors open to me, which enabled me to realize that everybody was just like me. That, you know, even if this person was a senator, they weren't 100 feet tall. If they were a king of a country, they didn't, you know, shoot electric bolts out of their eyes. They were normal. They talked to me, and they were no better nor worse than me. And which that taught me was that I had tremendous agency over my life. I could do whatever I wanted to do. The people that are succeeding, excelling, and are in control of everything from, you know, and I met, you know, kings and presidents, were no different than me. So, you know, why not me? Why can't I go off and do these things? Why can't I, you know, start companies, achieve things that are extraordinary, take tremendous risks and win? And I think that decision to run for student body president, the opportunity, because my classmates in the student body at Georgetown believed in me, opened those three doors, which was extraordinary in changing my life and led me to the career I have today.
So your advice to college students to make the most of their time in college would be to, like yourself, just get exposed to different ideas, different types of people, working together with other people, solving complex situations.
Take risk. Take risk. You know, there's no better time than to take a moonshot than when you're in college. You know, you have a place to live on campus. You have, you know, in general, you've convinced people, you know, your future employers, your parents, that you're going to class for most of the day, and therefore there's not much. There's not much other responsibility thrust upon you. So, what can you do to have that moonshot? You know, can you start a podcast? Can you start a company? Can you take a risk that gives you tremendous exposure into something else? So what you have is time, and what you have is a tremendous risk appetite. So whether you're starting a company, a podcast, or trying to get into a leadership role, understand what those risks are, understand how you could do that and the upside there. Because, you know, whether it's college or after college, it's a unique opportunity where your risk appetite should be almost infinite.
Now, that notion of taking risks leads me to where you found yourself after college in banking.
Mm-hmm.
A lot of students now, a lot of college students see banking as the next plausible step, the next best step for them after graduating college. It's obviously a very safe bet to go to banking, lock in for 2 years, 3 years, and pivot onto doing something else. First, what did you learn from your time in banking? But I think more pertinently, would you recommend college students to pursue going into banking for 2 years upon graduation? Or do you think that now, evolving landscape, business landscape, and the growth of AI, they should pursue other avenues?
So, it's hard to give blanket advice. I got a tremendous amount out of banking. I worked with some extraordinary people. I had a different banking experience. I worked at a small boutique bank, Houlihan Lokey, and I worked in a specific group in the restructuring group and doing distressed investments. And similar to the experience we just talked about, I got a lot of responsibility early. It was a small group at a small place that was trying to do a lot things that were a lot bigger than what they were doing, and they were successful in doing it. So the ability to get more responsibility earlier, I think, was key in a lot of in terms of building skills, both the hard skills in terms of core finance, valuation, et cetera, as well as the soft skills of presentation and really being able to understand and communicate your points. So because of that, I had a very good experience in banking. I have a lot of friends that are bankers. I think the question is, going into banking, should you do it or not? I think the core thing is, do you want to, right? I think the scariest thing, I think, where people have run into problems is they go in and do the logical next step. And I think maybe even more so than when I was a kid, there's a much more structured path of what to do next. I think kids today are much more programmed in terms of you're going to do this and you're going to do this. And even after school, there's probably less of maybe go off and ride your bike the way maybe when I was in high school was a real option. So I'm loath to put people on a treadmill of this seems like the logical next step. You could do it. I've had friends that have gotten into banking. I've had friends that have gotten into law because it seemed like the logical next step, and were unhappy because they chose it because it's what their roommates were doing. So don't do anything just because your roommates are doing it ever. Also, trying to figure out being true to yourself. At the same time, I think the couple years I spent in banking in terms of skill building, relationship building, and understanding how finance works were incredible. I have advised a lot of people to do it and do it in 2 different areas that I think are incredibly three different. I'll come back with 3 different reasons why to do it and the framework you put in. Do it because you're interested and you want to do it, not because your parents said so or your roommates are doing so, or if you feel like you can make a lot of money. Those are tough reasons to do it, and you definitely shouldn't be listening to any of those 3 voices in your head. Second is, are you going to a place where you feel like you're going to learn a lot? So my dad always told me that your 20s were really for learning, and whether that's through formal education in college or grad school, or whether going to places where you could learn a lot. So I think the ability to learn, and whether that's through a larger bank's training program or whether being at a place where they really invest in you and in your growth, super important. And the third thing is exposure, right? So are you working on deals? Are you working with people who enable you to build your skill set, learn and grow and understand how things work? I have a good friend whose son's at an investment bank, just worked on a big deal, take private deal that just closed, that he worked a innumerable number of hours over a long time. Like most deals like that, they came together, it fell apart again. It came together right before he was supposed to have dinner with his girlfriend's parents. The whole thing went on. Every element of a soap opera that's been going on is for bank analysts for as long as there have been bank analysts. But what he was able to see is the coming together, falling apart of a very complex deal, being on the call, seeing how people acted, how people interacted, and being part of something that's really interesting. And I think that, you're not going to get that in a lot of jobs when you're 22, 23 years old. So I think that exposure really matters. So if you want to do it and you're not just following the herd, if you could go to a place where it's going to invest in you and your learning and you go to a place where you're going to get great exposure are three excellent reasons to go explore the world of banking.
I think that idea that you mentioned about 20s being for learning, I love that idea. And you, after your time in banking, you did a bit of venture, went to business school, learned a bit more, and then founded your first company.
Yes.
Can you tell me a little bit about how you founded your first company, how you came up with the idea, and what lessons you learned from that?
So, it was almost sometimes you accidentally fall into opportunities. I think luck doesn't get enough credit in the world. And, sometimes you can make your own luck. Sometimes luck is opportunity meeting hard work, but you have to take advantage as opportunities present themselves. So I went from banking to business school, banking to investing to business school, to then a little bit of venture capital. And then there was sometimes when you're able to take on tremendous opportunity, it's because no one else wants that opportunity. And, in 2001, it was very much a downtime for technology. It was what some people call the dot-com bust of the go-go times of the late 90s in technology. Everything was going to grow to the moon, and that, like a lot of things that go up very high, they crash down very fast, and it creates a huge, huge ripple effect. And there was a company that was basically failing called U.S. Search. It was running out of cash, and it needed talent. And I was still in my 20s, and I took an opportunity to go and turn that company around. And so moved from New York out to Los Angeles and begun that turnaround process. Again, at in my 20s, being able to take on a massive amount of responsibility, doing some things I knew and was able to polish skills, some things I never had done before, didn't understand, and had no business doing, but I had to figure out, enabled me to learn a lot and build skills, relationships, and understand more about the world that we lived in. And then as part of that, we built that company up, we restructured it, we raised a bunch of money for it to enable us to both get to profitability, then being able to acquire companies. And then we had an opportunity to found First Advantage. So on the basis of U.S. Search, we were able to build First Advantage and shift into high gear and become not only a consumer business and finding people, but building our enterprise business and becoming the biggest provider of background screening, drug screening, credit screening in the world. So working on that and having our founding team do that was incredible. So, after seemingly very little time in the grand scheme of things, we were growing fast enough. We saw the opportunity to kind of refound the business and be able to pull in additional assets from other places. We wound up buying over 23 companies in 32 months, grew through acquisition. I raised a bunch of money in both the private and public markets. That was an amazing experience. Oftentimes, on the edge of running out of capital, which is something that is always a great experience in retrospect, a harrowing experience and a scary experience in the moment, but something that I even tell those stories to as entrepreneurs today. Although that's 25 years ago, the scars sometimes feel fresh, and obviously, let entrepreneurs know that you walked a mile in their shoes when you say, hey, I had, 400 people on the payroll, and I had, 3 weeks of payroll, and we had to go out and raise money to make sure we got from here to there. That was it's a large burden when you're in your 20s, or a large burden for anyone. So super important to be able to do that. I think people appreciate it, and helps me raise money now, knowing I got from here to there, and I think helps me have empathy for entrepreneurs, knowing that I was once there myself.
We recently had Spencer Rascoff, founder of Zillow, on the podcast, and he shared his formula for a great startup idea: high TAM, low NPS. When you think of your formula for how to come up with the next biggest startup idea, what would you say it is?
When we think about the next great startup idea, what we often think about is kind of an idea whose time has come. So when we think about a large market which is being disrupted by technology, which oftentimes didn't exist before. So if you think about, early days of StubHub and the opportunity to be able to discover tickets as a buyer or seller across a marketplace, not dissimilar to Airbnb, and how that discovery mechanism didn't really exist before the internet. Also large TAM, but being able to fundamentally disrupt a market. On the same trend, you think about Uber and what they've done by a new technology, in their case, of smartphones, which were able to enable the drivers to know where the drivers were and enable where the passengers were. Couldn't have existed in the land of the PC, couldn't have existed in the early days of the internet. But that was an idea whose time had come, and a perfect use of marketplace technology, Pinterest, and the ability to have a much more visual web that was available on a mobile basis. So, you had phones which had applications. Those applications had photos or rich media. That was an idea whose time has come, and it was a different way to discover things. So it's, hey, do you have a technology which is going to fundamentally disrupt a large market which didn't exist before? And I would probably also take a little bit of disruption and say, hey, is there a tip of the spear? Do you have a secret that enables you to go to market? Because oftentimes these markets might be somewhat known, and even somewhat known by the huge landed competitors of the hyperscalers of the world. Does Google know this market exists? Probably. I mean, there's tons of smart people at Google that know this market exists. But do they have a secret of how to get to market? So you're never going to have as many users as Google. You're never, ever going to have as much capital as Google. You're never going to have the brand of Google. So what gives you the right as a startup to go out and be able to disrupt all those things at Google? Well, you have a secret that says, oh, I could go to market in this way. In StubHub and Airbnb, a lot of that was search engine optimization, or SEO, and being able to get free customer acquisition by being able to take the long tail of the internet around ticketing or homes. By Pinterest, it was early days of being able to have an applet attached to a browser when that was new, and then being able to bring on both known curators as well as your friends and family to help you curate a wide variety of ideas. So that go-to-market wedge, which is often a secret that sometimes didn't exist before, but sometimes people didn't fully understand, is how you begin to build a big business.
It's interesting. I want to get back to the lessons you learned while founding First Advantage. We'll get to that in a sec.
Sure.
But to talk a bit about FirstMark for now, you founded FirstMark in 2008. Why did you start FirstMark, and what gap did you see in the market that made you want to do things differently?
Yeah, so coming off of First Advantage, we came, and I was thinking about moving back to the East Coast. I was from the East Coast. I lived in New York before. I love New York. Which was hard because you were leaving LA, and it's funny when you leave LA, everyone thinks you're going to be back in 6 months because it's hard to go back to the East Coast and go back. But I love the East Coast, I love New York, and I wanted to be here. So I thought, all right, well, moving back to New York, that's important. And I had a bunch of different offers to run operating companies, get involved on the operating side, and had to think about, would I rather be on the investing side or would I rather be on the operating side? And I said, well, I really like the investing ideas. I'd worked in venture before. I liked working with a number of people on a number of different problems across a couple of different industries, as well as just being able to come in and see new entrepreneurs and almost see the future every day. So all those things were wildly exciting to me. And then I thought, well, even 20 years ago. So, we originally had started the business or began the business in 2005, and this fall, we're hitting our 20th anniversary.
Congratulations.
So thank you. I appreciate that. So coming into being able to build that, it's like, well, it felt like there was tons of venture capitalists. So why am I going to be different? The crazy thing about this business is basically you're trying to sell dollars for more than $1 or less than $1, depending on how you see it. There's no real product except you plus dollars. So in a world where I didn't have, and my partners didn't have much venture experience, why should we exist in the world, and what's our unique take on the world that investors should give us money to be able to professionally invest. And we said, we thought maybe differently in a somewhat contrary way to what the world, where the world was at the time. We thought it was very early in digital disruption. As we talked about before, the early aughts were really not pretty negative on technology. People thought, some people thought the internet was the new pet rock, that no one was going to be on the internet. And that was a silly thing that people did in the 90s, but was going to disappear. We had a very strong conviction that it was just the beginning. And having that strong conviction that it was just the beginning, said, all right, well, if this is just the beginning, what's going to happen? And we believe that New York was going to be a center for it. And as all industries were going to be touched by digital innovation, how do we make New York a center for it? A lot of people also thought that was silly. And that was a very non-consensus belief that New York was the 7th biggest venture market in the U.S. at the time, not growing, really. New York is now the fastest growing. Fast forward 20 years, which I know is a long time. New York is now, depending on the metric, even some metrics, the number 1 venture market in the world and the fastest growing venture market in the world. As you think about all the industries that exist in New York and how digital innovation is changing them, of media and advertising, financial services, healthcare, all of these industries which are based here and why they're changing. So going back to 20 years ago, okay, so we believe in this concept of digital innovation. We think that New York is going to be the center for this over the next several decades. Let's go to New York, have a different concept around being early investors in digitally innovative companies, in industries that are in New York or New York adjacent or use New York as a gateway, and really understand those sectors really well. So it was actually the strategy there. Those were the 3 underpinnings of the strategy of a sector, stage, and geographic focus that actually has served us really well and is still the core of our strategy today.
In the early days, how did you expect to win deal flow? Obviously, people would much prefer, when you're just starting off, to go to some of the bigger firms, Boston bigger firms, Silicon Valley bigger firms.
Oh, yeah.
How are you dealing with that? Bringing people on, convincing people to take you on as a VC? That's
a great question. Because it's hard going back. Now that you have a brand, what was different before you had a brand? We try even do deals with people. And we had people tell us that, our firm would never do a deal with someone like your firm.
Why?
Just because we didn't have a brand, we were new, we didn't have either individual or collective track records, and that was punishing, right? That we thought, hey, we'll work harder than anybody. We know this sector. We believe in these things. So there's probably 2 things that we did that were different, right? We realized, we just had to try harder. We had to be able to outwork everybody else, both in terms of hustling for deals. Then once we are investors in companies, be able to outwork all their board members to make sure those entrepreneurs realize that we're going to do whatever it takes to help them. The second thing was, well, how do you get to the entrepreneurs that you're helping so much? Is that by being sector experts and having what we called swim lanes, where we're areas that we're going to dive very deep into, that we could both help those entrepreneurs by navigating the competitive landscape, but also help entrepreneurs think more deeply about that. And even going back one more step, identifying those areas that we think are most interesting. So, some of these things seem very conceptual. So I might, maybe put a little case study around that. So if you think about, I don't know if you know Riot Games, they're a developer, publisher of League of Legends, which I think for the last 17 or so, not that long, maybe 15 or so years, League of Legends is one of the most popular games in the world. Valorant's another one of the most popular games in the world. But we invested when they had 4 people and we're pretty far away from even having a game. And what we thought about was, hey, we think video games is a big category which is overlooked by venture and is growing incredibly fast. So big TAM, growing fast. Not only is big TAM growing fast, it's also changing a tremendous amount. And again, this was 15, 17 years ago. we had seen music move online from a disc-based system to a digital-based system. We'd begun to see, although Netflix was probably a mail-based business at the time, we began to see streaming start to occur. And we knew it was just a matter of time before video games became a digitally distributed business. And then we thought about, what did that mean? That meant that games would go from being a single-player experience where you put a disc into a machine that you played by yourself to a networked experience where you'd be playing with people next to you, but also from people around the world. And that would create collaboration, competition, and community to be able to get involved with people from everywhere. And what would that mean from a customer acquisition perspective, that you'd be able to use online advertising and use community-based marketing to find those folks. And then the second piece is we were already seeing in Asia the beginning of a microtransaction items-based economy. So before this, you had to pay $75 to get a disc that you put into your couple $100 console to play on your own TV, where high upfront costs, one amount, instead of kind of paying as you go, where you'd have microtransactions as part of that economy. It was very prevalent in China at the time. It was increasingly popular in Korea with games like Kart Rider. And we believed that microtransactions was going to be the future of online gaming. So, and then for those microtransactions to work, we were wrong about this, but we thought you had to have AAA quality games. Obviously, companies like King and Supercell have proven you could have broad-based, light touch games. You could also monetize really well at microtransactions.
Yeah.
But so we said, here's what we believe: microtransactions based, online video games, AAA quality, community-based marketing. And we proactively went out to the market. And really, there was like one group who was doing it, that we thought was doing it in a clever way. Riot Games. And if you talk to Brandon Beck and Mark Merrill, who the co-founders, I think they had been turned down by 25, 30 different VC firms who thought video games were trendy, video games were you couldn't make money in venture, no one really cared about it, so you could never build a big business. They had all their conventional wisdom beliefs, but we thought maybe a little bit differently, a little bit more deeply about the problem, the concept, the business model, and that enabled us to fully circle back and say, we believe in these things. You believe in these things, and that gave us the conviction to write that first check to Riot, enable them to get going. We were then able to pull in my good friend Mitch Lasky from Benchmark, and pretty soon after that, we were off to the races. But that wasn't a competitive deal. That was a deal that we believed in where others didn't. So we were able to kind of source our own opportunities instead of playing in the same consensus field as everybody else.
So when you're just starting off, it seems like a lot of the game in venture capital is about differentiating yourself, being a contrarian. It seems like that's what you need to do in order to get the initial edge.
Definitely. You need to be thinking differently. You need to be out there saying, well, other people that are thinking differently in the same way. Do you believe in video games? Do you believe in digital distribution of social media? Do you believe in marketplaces that use communities? Do you believe in direct-to-consumer healthcare? Whatever our good, strong core beliefs are, how do we get from here to there?
Yeah.
So you have to start off by, waving that flag and then amplifying that voice largely via social today. It was harder back then. And then, being very tight around your thesis. So trying not to do everything, but, really saying, I'm an industry expert that's going to be able to help you. And then, like everything else in life when you're starting out, just working as hard as you possibly can.
That's all for this episode of 30 Years in 30 Minutes. Part 2 drops next week. Subscribe now so you don't miss that next part.